Hey, hello again, everyone, and welcome to the Options Mentor. I am going to talk about a setup for a trade next week that I'm looking to hopefully be able to put on. It's a trade that I covered in an earlier video. You should see it there at the top of my YouTube channel, and it's called the double long diagonal. Pretty excited about this trade. It has now worked for me 9 weeks in a row. So that's a pretty decent trade, giving me very little trouble inside the trade if you just follow the plan. So let's take a look at one here. I'm going to share my screen, and you will see my TD Ameritrade Thinkorswim analysis page where I have a double long diagonal setup for next Friday. So let's kind of go through the components. So the components are a call diagonal, as you can see down here, where we're trading currently at 39.22. So I went up to 39.65, about 40 points or so. And I bought that call. And then 5 points higher, I sold the 39.70 for March 31st. So April 3rd, 39.65. And March 31st, 39.70. And then on the put side, I went down around 32 points or so. Bought the 38.90, sold the 38.80. I go 10 points wide on the put side because it does give you a better downside graph. If you only go 5 points wide, let me show you here what happens. If I only go 5 points wide on the, or excuse me, if I go 10 points wide on the call side, then what happens is the trade looks much worse if it goes down. See that? See how that looks worse? We're well below that daily line. But if I only go 5 points wide on the call side, then it looks much better. So that's why I do that. But the idea of this trade is generally it's long Vega, meaning that if volatility went down against us, which means my longs didn't do as well holding their implied volatility as maybe the shorts did, that's not good for this trade. But our theta burn, look here, positive theta over $160 a day at this point. So that could help us even if volatility does shrink this down a little bit, which could happen if volatility goes down. And we are trading with the VIX around 24, so it's getting up there. So the way I would look at this on Monday, if you come into Monday morning, and let's say the VIX is still around here, maybe lower, perfectly fine. So somewhere around even 24 or lower, if you want to take the chance, you could set up a trade like this. Now, you say, Mark, is this the strikes I use? Well, I don't know where we're going to open up on Monday, right? So I can't say that, but I can say this, that if the VIX is, say, whatever, 22, 23, Monday morning sometime, maybe we're trading, I don't know, 39.60 or something. Well, then just go up 30 or 40 points from 39.60, buy that long call, sell something 5 points higher, and then down 30 or 40 and set up the put structure, buying a long put, selling the short put 10 points lower. So just the same structure, just shifted around based on where we're trading. Now, if we come into Monday, maybe there's more banking problems and the market's down 80 or 100, the VIX is 27 or something. No, way up over 25. Don't do this trade, right? So you can't just say, hey, every Monday I do this, because you could have a bad day, something where the VIX is really going nuts. So keep that in mind. But if we're around where we're at now, volatility wise, or even lower is even better, you could set this up for next Friday. I've even done these as late as Tuesday of expiration week. I did that after the CPI release. I waited till it was over on Tuesday, and then that day I put on one for Friday. Worked fine. This trade's been doing very well. So just try to get yourself a 10 to 15% profit and get out based on what you pay for the trade. So if I got this trade on here for, well, let's say 13.70 on Monday, that's meaning 10% was $137. Maybe you want to try to get 150, 160. Well, then just go right ahead, get that 150, 160, and just get out of this trade. That's the idea. Now, you could take this trade up to Thursday if you're staying pretty well centered, because it is so wide. I've even taken them into Friday morning, expiration day, if I was really well centered, but you really need to watch it. If you're taking this into late Thursday or Friday morning, don't do it when you're on the edges, all right? We don't want to take those kind of chances. But if you're centered, you're going to be around and can watch it. You can maybe tweak a little extra theta out if you want Friday morning. up to you. But I hope you get something out of this. This trade's been very successful for me. Let me know in the comments what you think. And please don't forget to subscribe and like the videos. Tell your friends about it. I'm trying to build a following over here to talk about what we do over at Sheridan Options Mentoring, SheridanMentoring.com, where I've been a mentor now for 18 years. So you can come here and learn some of this stuff. You can go there and learn even more. So I will talk with you guys all next week. Have a great one. And I really appreciate you following me here on YouTube. Bye-bye.